Yep, got it.
Okay, so stop me anytime when you have questions. I'm just gonna do a quick overview of the trend trader. Um, let's see. So we got a couple of people. That's good. So this is the presentation. I'm just gonna run through it. We'll do another one where I'll go to live settings. But so basically, see. So again, not financial advice. I know nothing. Um, but basically, what we're talking about is we have a pretty good indicator that help us with buy and sell signals so that you can react to the market, trade what you see and not what you expect. Okay, you've heard this before, but I mean, it's so important. Um, and then we have the other indicator that does the auction levels that will mark very important levels, and we'll talk about them as well. And then we have the notifications of market events, and you'll see it's one of the channels in the Discord. So if you look at price movement, I mean, it can move in a trend, it can move up or down, but basically it's going to move in waves. So even when it goes up, it's going to move in waves. Those waves are really important because it's going to give you a good place to get in. If you're going to chase it, you're going to buy it at the top. Just as you buy it, it's going to turn. You're going to get a terrible price. Then you're waiting. So now you're red. Now you're waiting for it to come back. And as soon as it gets back, you sell it, break even, you're out. And then it keeps running. And then you lose out on lots of profit. Okay. So you cannot chase. You have to buy on a pullback, as hard as it is. And we're going to talk about the best ways to spot that. And the idea is that we have this private group so that we can focus on a very specific strategy so that we can get the best entries, so that we can hold through the waves. Okay. So really consider attending those, give feedback, let's get good at it. But I tell you, the strategy works. I lose money when I don't follow it. I lose money when I take my own trades. When I go with the strategy, I wait for it, I use the indicator, it's magic. The other way price could move is mean reversion. So I'll show you the bands. It will bounce off the top and the bottom band, sometimes VWAP. Most of the time, that's what you're going to have. And if you open in the same range as the previous day, you're more likely to have mean reversion. So some people find mean reversion easier to play because you just short at the top and long at the bottom. Okay. Trend days, you can make way more money though, and then you have chop sideways. So when you see chop, you want to stay away from it, and you'll see. I mean, the indicator is not good with choppy days, but it will show you. You'll see the wicks, and once you recognize what it looks like, you'll know not to trade. Okay, you only need one good trade a day, guys. And if there's no good trades, then just sit out. Okay, so trend day statistics, it's 16% of the time. It happens enough that you can make a ton of money. We had a great trend in the afternoon today. And if you waited for it, if you were patiently, if you were not fighting the trend, you could have made a lot of money. The problem is that most retail traders have their biggest losses on trend days because they keep fighting the trend. Okay. The other thing you have to remember is if you get into a bad trade, let's say you see, well, everyone says Meta is going to do this or that, you get in it, what happens? You're babysitting that trade. Now you miss all the other good trades. It's like you're dating this girl and then Miss Perfect comes along, but too bad because you're already in a relationship. So don't get into a relationship on a trade. Wait for that A plus setup. Okay, that's so important. Don't rush into trades. Wait for a good setup, and you're going to do much better. Take fewer trades. Okay, so the strategy, and I'm rushing through this because we don't have a ton of time. But let me quick check. Any questions at this point? Okay, I'll take silence as nothing's working or everyone gets it.
It's solid. I would just say that with my wife. Leave it at that.
Dead. Okay. So the strategy, and I mean, I put a lot more time into the strategy on the Discord. Okay, so that's really where it goes into a lot of details, and we'll talk about that the next time or some other time. But basically, again, trade what you see, assume mean reversion until the trend is confirmed, because most of the time, 60+% of the time, you're going to be in mean reversion. So you assume that until you prove it wrong, until you see a trend is confirmed. Know when not to trade and know when to get out. Always have a stop loss, guys. You gotta have a stop loss when you get in a trade. The first thing you gotta do is have a stop loss. What am I able and willing to lose? You start there. You don't take a trade unless you mark how much you want to lose. Okay, and that takes out all emotion. You cannot trade unless you do that. Otherwise, you will not survive this game. Okay. And then know what the levels are. We'll talk about that. Know what happens at levels. So VWAP, it's very common that it's going to bounce or reject there. So know what could happen at different levels. Wait for the signals. We trade on a 2-minute chart. We confirm it, the trend on higher levels. And it right now I added some features that make that much easier. Scale in. So I'm not. You guys can read this all at your own pace. I want to get to the charts. So this is the basics. Okay. So what you want to do is you want to enable electronic trading hours for the best results. And then you want to keep, you can keep separate tabs for every ticker on your watch list, because that way you can just quickly jump between them and you don't have to wait for TradingView to repaint the new ticker. So if you could do that, that's going to be much faster. A lot of our strategy is based on the EMA clouds. Ripster, the dude that basically invented the idea, and it's based on 10 minutes. So even when you look at the 2-minute chart, I am drawing the 10-minute EMA clouds on that 2-minute chart. So anything below 10 minutes, it's going to draw the 10-minute EMA clouds. And we're going to show you when you're below it, you have a bearish bias. When you're above it, you're bullish bias. And then we also have on the second indicator, we have the call put triggers that's based on the Sadie ATR levels. But his levels always is based on the previous day's close. Okay, so we use for pre-market, we use the same previous day close just like he does, but when the market opens, we adjust it based on the open price. I find that works much better for day trading. So if you look at this 2-minute chart, so the VWAP, that's the white line. When you cross it, we mark it because the VWAP is so important. So the EMA cloud, it's just this green thing here when it becomes oh no, where's my EMA cloud here? It's hard to see on this one, but I'll show you on another one. So we have these upper bands and lower bands. I'm not going to go through all these details because you can look at it down here. We have the market internal. So the tick, that's how many stocks in the entire market trades on an uptick or a downtick. So that tells you basically whether they're making progress. And then we have advanced ADD, which shows you which stocks are advancing in terms of price or declining. And then Vol D is the same thing, but based on volume. Then we have on the higher time frames, and we'll show you on 3-minute, 5-minute, 10-minute, 15, it's hour, daily, weekly, monthly, whether this ticker is bearish or bullish. And in the latest indicator, it have different variations. So if it's bright, it's very strong. If it's dim red, then it's much weaker. And above it, we also have the super trend indicator for every time frame, and that's really important. So when this upper band is green, that means that super trend is active for calls. When the lower band is red, then super trend is active for puts. And so it will indicate it, and I'll show you another screenshot, but it will indicate it in every time frame. So if you see that on the 5-minute, 10-minute, 15, 30, 1 hour, they're all red, they're all super trend puts, like it was today, then it becomes a no-brainer. Then every bounce you short. Okay, so use a bounce to short and align with the trend instead of fighting the trend. So we'll talk about that. So this is the new indicator. This is where it shows the super trend based on that. This still doesn't show the color variations, but you'll see when you install it. This is the EMA clouds, so you can see it a little bit better. So when it's a green EMA cloud, above it, you're bullish. So this is the 513, and then this one down here, that's the 3448 EMA. So that's a little slower moving. So when you're above both, you're going to be bullish, and to become bearish, you have to break below the 3448. Now Ripster, he uses 3450. We use 3448 instead, so that's one subtle difference. But you can see here, so we got a bearish bias here, and then here we go above it, and now we have a bullish bias. And when we have a pullback, we get in and we go up. Okay, so a lot of it is based on understanding these. There's a lot of documentation on it from Ripster and everyone else. And then this helps you to see the higher time frames without having to switch charts out to every time frame. And then the indicator will also tell you if you have a bullish trend on higher time frames and for how long it's been like that. So you can see here, it tells us, so on all my charts I put in the bottom right corner, I try to tell you what the ticker is and what the day was. So if you want to go back and look at Tesla on 6-7, you can go and recreate this. And you'll see it will look a little bit different because I constantly add new features. So it will look a little bit different, but you'll still be able to see the same concept. Right here, it shows us that the trend that we have a bearish, because it's red, there's a bearish trend on the 30-minute chart, and it's been going on for 118 minutes. So for the last 2 hours, we've been bearish. And this, what it shows here, is based on the last candle. So that's where we are in time. So if you use the playback on TradingView, you can go back and you can to this point, and you can see what all the indicators would have shown at that point. But you can see clearly everything up to the 30-minute is bearish. You can see we're moving down. We have lower, red lower band, but you'll see that this is mean reversion still. So it's mean reversion. And it basically means that you'll see the blue bands. It might be a little bit hard to see on here, but you'll see on your own indicator, you'll see it. So the bottom band is blue, and when it turns red, that's bearish. Upper band is blue. When it turns green, it's bullish. So you'll see that the price on a mean reversion day, the price will come down. It hits the bottom band. Do you see all these circles? It bounces up. It goes to top. It hits the top band, and it goes down. And there's a circle missing, but this is the VWAP. So the VWAP is the median price. So the VWAP is the mean in mean reversion. So you're gonna have the price bounce between the bands and the VWAP. Okay, and so basically you see it goes there, goes down, goes up, bounce to the VWAP, goes up, goes down. Little bit of playing around on the VWAP, then it goes down, then it goes up, then it goes down. Goes up to, it doesn't get to the VWAP, but it gets to this 21 EMA, which is another important pivot. And then these dots, that's the trend dot. So that shows you what the trend looks like. It's blue when it's falling down into the water, and it's yellow when it goes into the sky. Okay. And then again, internals here in the middle. But so on a mean reversion day, you can see you just at the top, you get puts, at the bottom you get calls. If you buy stocks, you just short and long. Okay, so that's mean reversion. With the bearish bias, you're gonna assume this until it proves something else. Now in the beginning, don't trade the open. Okay. Okay, so this is a trend day. So you can see on here on the 2-minute chart, you see that the top band is green, so that's bullish, and you see it's green at certain times. But if you look at the 10-minute, you can see that the band is green more for longer. And if you look at 30 minutes, it's green all day long. Now that, with the updated indicator, you'll see the T on the 30-minute all day long, a green T. So this helps you not to having to jump to all these different time frames anymore, because now it shows you that in the bottom right. You can also see here in the top middle, it says we're in a bullish, because it's green, a bullish trend on the 60-minute chart, and it's been going on for 178 minutes. Okay. So these are all things that gives you a very good idea of, what to play. And when you're above the EMA clouds, both the 513 and the 3448, you're not gonna play puts. That's the best way to lose money. So when you get a put signal, that put signal is what you use, and you wait. You don't buy puts. You wait until you get to the bottom, and then you're going to play the calls to align with the trend. So the idea is that you only want to trade with the trend. Now, I'm not saying you shouldn't scalp the opposite direction, but no, it's a dangerous game, and you're building bad habits. Can you do it? Sure, you do you, okay? The better strategy is to look at this. We see that we're riding the EMA cloud. The EMA cloud is slanted up. It's getting wider. So we're riding it like a wave. We see that we have a bullish upper band. And so there's no reason to play puts. And we'll talk about the open range and all of that. And it's all documented in the strategies. So we'll talk about good places to get in, but right now I just want to give you an overall feel for the indicator and for you to know that you want to trade with the trend. So when you see a lot of wicks, so you see the candle and then the outer edges, those are wicks. So you want to avoid those. When you see a lot of X's here, these X's, that's crossing the VWAP, stay away. It's chop. We don't need to trade this. This blue line here, you can see on the right, and this is the second indicator, that's the pre-market high. So for the best plays, you want to be above the pre-market. If your best calls play, you want to be above the pre-market high. You want to be above the VWAP. You want to be above the open range high. Okay, so that setup, and then obviously above the EMA clouds, that setup makes for the highest probability trade. And all we're trying to do is probabilities, stack the odds in our favor. So if I just told you all of that, where's the right place to get in? Right here. Right here is the place to get in, because we're above all of those things. And so whether you want to, I am teaching, buddy. That's my 3-year-old. Just very curious. So you can see this pullback where it hits the VWAP and it holds it, and then you get a yellow triangle. I mean, this is a great spot. Obviously, in retrospect, it's much easier to see. But here's another pullback. Okay, so for the brave people, you can get in over here. For the people that are more conservative, this is the spot to get in, because again, you're above everything. You're holding the EMA clouds, and here's your call signal. You can get in. Another great spot to get in. So we'll talk about all those things. You want to watch the VIX. You want to watch Apple. You want to watch SPY. So it's dangerous to trade against the market. So if the market is moving down and this sticker is moving up, then you want to be more careful. Now, some other things here. This is showing you the current cumulative volume for today. Okay, and it is 79%. At this point in time, it's 79% compared to the average daily volume on the sticker. So if you look at all of the mega caps and you see that everything is at at this point in time at 30%, but Meta is at 50% already, then you know Meta's got high volume for the day. If Meta's at 10% only, that's low volume for the day. You do not want to trade tickers with low volume because they're going to be more choppy. You want to focus on the tickers where all the action is. I mean, remember, the traders can trade anything they'd like. So you're not going to trade something that's not going to make a move. So you're going to say, okay, where's all the action? Let's join the party. And that's what you have to do. Okay, and it starts off with looking at the volume and then playing the email clouds and understanding the levels. This also lists the VIX, and the VIX at this value, it is bearish for the market. So this is opposite of what VIX is. So obviously VIX is bullish because, you know, I just changed the color here to make it simple. But this is showing that right now VIX is having a negative impact on the market. You can see it because, again, at the point in time, you can see it just dropping. So you can watch that. You can watch the internals, and that's going to give you a good feel for what to trade. So again, you could go through these slides in detail by yourself, but just a high-level overview. Again, expect mean reversion until there's a trend. So this starts off AMD. So it bounces off the bands, and then it gets here, and then you could see a trend starting. It's holding the VWAP. It's above the pre-market high. It's above the open range. So again, all of these things just make it more probable. So if it holds, you could see over here, you can see, okay, we have yellow trend dots, we have green upper band, and we probably have it at higher time frames as well. So you could get in sooner because we're above the VWAP. Definitely always wait for the VWAP. That's so important. And then you could say, okay, I'm not above the pre-market high yet, but I think this is going to go. So that's fine. Get in small. Set your stop loss. Okay. Do not add to losers. That's so important. And then once you get above pre-market high, you're like, okay, let's add some more. You get above open range high. Okay, let's add some more. Okay. So add to your winners. Definitely make sure that you move your stop loss up. Don't let a green trade go red. Take some profit at 20%, 30%, but make sure if it looks like a trend, make sure you keep runners. If you don't see a trend, if it's mean reversion, take your profits, move on, and wait for the next trade. So again, here's another one, AMD. And again, at the higher time frame, you can see how the line is green all day long. So when you have this nice pullback, it is a great time to get in. But what happens, most of retail traders says, oh, look, I'm getting into puts. I think it's going to turn. But you got to understand, when you have a high volume day, and this wasn't really a high volume day based on that number, but when you have such a strong move, now obviously if the day starts off with super strong candles, many times those don't last and they change. So never trade the first candle. That's the amateur candle. But if you have such a strong sustained move where it stays outside of the upper band and it keeps going, and then it pulls back like this, your first gut instinct is going to be to get puts, and that's where you lose your money, because now you get puts, then it goes up, and then it goes up, and you're like, well, I think it's going to turn, but and then you keep fighting the trend, and then you're like, okay, now I can add some more and get it cheaper, and then before you know it, you just blow up another account, and we've all done it. But so again, you look at this, the market is trending, this stock is trending on the hourly. There's no reason to play puts. So when you get a put signal, that's your chance to align with the trend. And you keep doing that until you're wrong. Now, so the best way to play it is you wait for...
Are you saying,
go ahead.
Rick, you're saying when you get a put signal, That's more like a heads up to, hey, I can get into the trend.
That's right, because you see a trend day. Because again, my upper band is green all day long, and like I said, now with the updated trader, it's going to show it here in the on the bottom right. So when you see a trend day and you see a pullback, okay, and now for the trend to change, it's got to break through the EMA clouds. So as long as it holds these EMA clouds, okay, the trend is still intact. When you have the green upper band on all the time frames, the trend is still intact. Now, can it change? Absolutely. I mean, nothing is a guarantee. But it is not a good idea to play puts at this point because the trend is holding. It's a healthy trend. It's a pullback. So what you do is you wait at, so if you look in a little bit, you'll see. So if you look right here, so that yellow triangle, that's saying that the short-term trend is moving up, you get that green again. But when you start seeing these green little triangles, that's showing you that we're starting to move up again. So this would be a good time around here to say, okay, it's holding. I'm gonna get in. I'm gonna align with the trend. And now, because you waited for a good pullback, you're getting your calls much cheaper. So if you're wrong and the trend changes, you'd lose less money. Okay, if you're right, you're making more money. Okay, so that's so important. You got to know how they steal your money because they want you to do the opposite of the right thing. And you've seen it time and again. You do something, and then just as you do it, the whole market turns, and it feels like they're watching over your shoulder and they're just have it in for you. So again, we'll talk about all these things, but the trend can change. But to do that, there's steps that needs to happen. It needs to break through the 513, which is this one. It needs to be below the VWAP. It needs to break below the 3448. I mean, so if each one of these things happen, then you want to be more careful. But if you look at the rest of the market, if you look at the market internals here, you can see it's super bullish. You look at these things. So there's so many things here that tells you that this is a strong trend. There's no reason to play puts. And so what you do is you align with the trend, you get in. Okay, this is a good spot, and I explained why. And then if you're nervous Nelly, then as soon as you get a new high of the day right there, you take half the profit. Let the rest run. Okay. So now, what you want to do is if you can get to a spot where you cannot lose money anymore. Okay. So all the risk is out. So now you have a stop loss. It doesn't matter what happens, you cannot lose money. You locked in some profit. Okay. The screen trade can never go red. Now you can let it run. Okay, and that's where you get your big multipliers. That's where you make a lot of your money. Okay. So, any questions before I move on to the next section? I know I'm rushing through this, but I just want to give you an overview because you could study these things yourself. Okay, good. So now let's talk about picking your play because obviously you have a watch list. You want to make sure you do the right thing. So you can trade it open, but again, you want to ignore that very first candle. That's the amateur candle. That's where they fake you out a lot. You want to make sure that when you take a trade, give it. We trade under 2 minutes. So you want to wait a candle or two to see what's happening. And then, you want to scalp it. And what you got to understand is that when you move into the 10 a.m. area, anywhere from 9:45 to 10 a.m. to 10:15, the trend could change. So you want to definitely take profit into that 10 a.m. time frame so that you have your profits. And if the trend changes, then you're fine. And again, any trade you take, the first thing you do is you set your stop loss. What can I lose? Okay, you set it. You cannot trade without a stop loss. You will not be in this game for long. set your stop loss. You're going to take profits into 10 a.m. You move your stop loss up as you know as you're right, and then if it violently turns on you, you're not going to be losing money. But you can see how this around 10 a.m. it goes back, and now you're like, oh great, this is a great time for me to align with the trend. I'm going to wait for the pullback. I'm going to buy some calls, and then it just keeps going. But you see what happens here? We're breaching the VWAP. We're not able to sustain it. We fall below the pre-market high, and then suddenly it's a good time to play, puts. But again, and we'll talk about all of these things. But when you have a big candle, very strong candle, you want to be careful because it may not. Because you don't have a proper auction, so many times it will come back and it will re-auction it to see if take other people's money. Now, if you don't want to, so obviously news is can help create your watch list, but you're only gonna trade calls when you're above the EMA clouds. Okay. And above the pre-market value. So the pre-market levels are super important. So install that second indicator. It's going to mark it for you automatically, but you do not want to really get bullish if you're not above the pre-market highs. Again, you could make money many ways, but go find an A+ setup. And an A+ setup, you want to be above the pre-market highs for calls. You want to be below the pre-market lows for put setups. Okay. Now, so if we look at this, so this is another example, trade at the open. So you're not, so you wait for it. You see we're above the green EMA clouds, we're above the 3448. Right here, that blue line, we're above the pre-market high. Okay, so now, and then you have a call signal, you have a yellow triangle that says short-term trend is up, you have a green upper band. So all of those things say, hey, time to go. So if you're fast enough, again, this is like the second or third candle, so this is very quick action, but all of those things says time to get into calls, and you can write it. And so what I like to do is, obviously, if you have long candles, those are good. So your IV is very high, so long candles are more expensive, so you don't want to, ideally you want to get in on pullbacks. So like this candle that has a pullback. So this was a perfect pullback to get in. If you get in on a long candle, you're going to be overpaying. Okay, long candles are for taking profit, not for getting in, because you're totally overpaying, and it's going to take a long time before you're profitable if you get in on long candles. So wait for a pullback, wait for that price. It's always there, I promise you. So then I like to take some profit on long candles because, again, the price is inflated. And then I'll stay with my runners, I'll stay in while my upper band is green, because that is, again, a bullish sign. So you can see here's a healthy pullback. But, the trend is maintained because we're not breaking through the EMA cloud, so we're fine. So a shallow pullback will be to the trend dots, which is the 13 EMA. A bigger pullback will be to the faint white line, which is the 21 EMA. The VWAP, if it slows by, that's a great time to get in, because a lot of the bigger traders will use the VWAP to decide whether they get in, because the VWAP is the fairest price. So that's what you gotta understand. So if you go bargain shopping and you want to get a fair price, that's the VWAP. Okay, so that's why it's so important, because people's like, well, this is like a great price, no one's getting screwed, I'm getting a fair deal, so this is a good time to get in. So if you're above it, calls. If you're below it, puts, obviously. So that's a great entry. It's holding it. And again, you can look at all of the other indicators to show you that this is a nice trend day. You can see that my EMI clouds are expanding, it's slanted up. So that angle is also very important. And then obviously my shorter time EMI clouds, same thing. So here's a reversal. So let me show you what a reversal looks like. So this is where the day starts. Okay, so in the pre-market, so this was DraftKings. I don't trade DraftKings, but it was, a great example. So you can see pre-market, it totally gapped up. So now if it gaps up, there's a possibility that it keeps running and you can make good money, but also gaps, a gap up creates good opportunity to play that gap fill, and actually make good money. So your risk to reward for puts is much better on a gap up, and your risk reward for calls is much better on a gap down. So that's why if the gap is not very big, many times you'll see that gap play is a very important strategy that many people use. But either way, so you can see it's nice gap up in the pre-market. It's above the EMA cloud, so very, very bullish. It's above the 3448. Market opens, it touches the pre-market high, but it doesn't go above it, it doesn't hold it. So that tells you that we're not playing calls because it has to break it and hold it, okay? What happens next? Look at how my EMA clouds turn red. Boom. Okay, this is not looking good. So if it's not gonna be recovering soon, this looks very bearish at this point. But it's still a little early to jump in. Now if you're aggressive, you can jump in small, you set your stop loss, and you play it. Then you can see how my 3448 levels down. So that's not good. And then once we start breaching it, now we're full on bearish. Okay, so now you get a combination of, we have a put signal, we're below the VWAP, we're below all of the EMA clouds. Right here we break the pre-market low. It's at this point, it's no-brainer to go bearish because you have all of the signals. And if I had the other indicators there, you would have seen that as well. Then you have a bounce here. So it looks like it wants to recover the bullish sentiment, but it just rejects, and that rejection right there, again, boom, bearish again. So as you use the indicator, as you watch it, as you watch the behavior, you'll learn what it means. When you have the EMA clouds, when you have a curl, you know that it could, like this curl here, it could recover the bullish trade, but then it curls the other way and okay, we're back in. So it's so those are the things you want to look at. And in the Discord server, you'll see that there's a lot of documentation on all of the different strategies and how it works, and that's going to help you a lot. So here's another example: traded open, failed reversion. So we open up, it goes up, and then it looks like it's gonna fail. So it looks like, remember the previous one? It goes up and then it fails and then it just goes down. So this one goes up and it looks like we're gonna go bearish. It breaks through this EMA cloud. So now we're like, oh, this is not good. Then it goes and it tests at 3448, and this is the last line of defense. So if it bounces off this, then we're back to the original trend. You can see how it beautifully bounces off that. And you saw that today on SPY and SPX, where we tried to go up and we rejected the 3448 twice in the same spot. And then I posted a note and said, okay, this is not good for bulls. And then a minute later, we got a put signal. And we got more than 40 points down on SPX. What an amazing trade. But it's just simply using the strategy. And so you can see here again, it rejects it. So now if it cannot break through it, then we're not full on bearish. Goes up. We get the yellow triangle. You know, it's still a little early to get in, but we're above the pre-market high, so that's good. As soon as we get above the VWAP, man, now that's where I want to get in because we're above the EMA clouds, we're above the pre-market high, we're above the VWAP. It's down. Now we can write it out. Again, if you're more aggressive, you can get in because you're above the pre-market high. But again, you know, set those tight stop losses if you want to be aggressive. But what you'll find is that waiting a little bit longer and making sure that there's a real party going on, you know, yes, you're going to lose more of the party, but you'll know there's a party and you're going to lose less money. So you're going to have more successful trades if you wait a little bit longer for confirmation. Okay. So this is trend reversal based on basing. So today, you know, I posted because SPY was going down and then it was starting to base. I'm like, okay, it looks like SPY is basing right here. So, you know, and basically what it means is like it goes down and then it's like you have these long wicks and it's around the same level. So this, when you see these long wicks and it's around the same level, it's a decent indication that there's buyers. So it's basing here. It's like, okay, I cannot break through this because people are buying. And so when you have enough of these, we say it's basing, and then at this point, it goes up. And that's exact. So with SPY today, you can go look at the live chat. Basically, I said, okay, it's basing here. And then it moved up for 12 points on SPX. Great trade. Then we got there, and then it rejected the 3448, and then it gave it another go and it rejected at exactly the same spot. I'm like, okay, this is not good for bulls. And then the next thing, there was a put signal and we took it down 40 points. So again, all of these concepts, I mean, this played out so well today, you know. And so if you just follow, use the indicator and you follow the strategies that's documented, you should have made a ton of money today. It's safer to start trading after 10 a.m. You know, because things happen very quickly at the open. And then your real trend kicks in at 10 a.m. And so when you look at this, you could look at, you know, your watch list, and you'll use the sentiment background colors will show you. So if every ticker is green, then obviously the market's moving up. So that's nice. If every ticker background color is red, then obviously it's a red day. But then, so I'm not going to go through the details here, but you'll see on every one of these, I have some notes as to what's the good and the bad and the ugly. And then based on that, if you want to play calls, then I rated Amazon the best, AMD second best. If you want to play puts, then Meta's rated best, and then Tesla second. And you'll see all of the logic here. And it's better to look at, you know, the way the market is moving. So if the market's going up, you want to find tickers that's good for calls and vice versa. Now, obviously, if there's news, then, you know, you'll find Tesla moves completely the opposite direction of the market, and that's fine. But those are trickier setups. So and you can play them, obviously. That's perfectly fine. So these are the sentiment colors. So they're on by default now. So the brighter they are, the stronger they are. But basically, this will help you to very quickly establish, you know, what you want to do. So it's based on the EMA clouds, you know, am I above it? Am I, which one's the VWAP? And so if it's black, then obviously it's in a transition. But the idea is that you do not want to play calls when the background is green, red. You don't want to play puts when the background is green, okay? Because it's a low probability setup. Can it work? Absolutely. But the idea is that you want to play high probability setups. And based on that, follow the rules. You could still be wrong, but you stack the odds in your favor. Okay, so you can see here, we have a call signal, but we're in red. So can you take it? Can you make money? Absolutely. You get a put signal here, but you have a lot of chop. You see all these X's, stay away. You see all of the wicks, stay away. Okay. Can you take it and make money? Absolutely. You get this call signal. Can you make money? Sure, but look at all the X's, look at all the chop. Stay away. Now you have a call signal. You're not in yet because you're below the VWAP, but then you break through the VWAP, you hold it, your EMA clouds go green, your background sentiment goes green. So now it's a good time to get in on a pullback candle. So you can get in here. You can use this opportunity to get in. Look at your higher time frame levels. And like I say, right now, the indicator has T's above to show you if super trend is active for every specific time frame. And so when you see super trend today where it was active on like every time frame, or puts in the afternoon, you see the background color. I mean, it was just such a no-brainer this afternoon to take that right downhill. Sentiment colors, again, you can go and read, all of these. Again, same things that we talk about. We're below the EMA clouds. Don't play calls. This is a way for you to wait to play puts. Okay, so I know the indicator says call signal, but you have to just like think for yourself. Until I add, Adam's AI, you're gonna have to think for yourself. And so you can see it rejecting the VWAP. Beautiful, beautiful put at this point. Again, you can go read these at your leisure. EMA curl, that's what I talked about. So you can see the EMA clouds. You have this curl that goes down. That makes the trend stronger because your slope. Because I mean the slope is super important. And if the slope increases, then it makes it a stronger trend. When the EMA clouds, when it gets a little bit wider, that's good too. But you can see then here you get a curl in the opposite direction. So that's where now we're like, okay, things might be turning. Okay, so those curls are very important warnings of what's to come. Now these blue X's. So if you look at these bands are Keltner channels. They're well documented for great areas for bounces, but then there's an extension to the Keltner channels, and I mark it with the blue X's. That's where it's very overextended. So when a candle hit that very overextended area, I mark it with an X. And you'll see many times when it gets there the first time, it will reject. So it's a good time to take profits. But if it can stay in that overextended period and it can keep there, that's a strong move. And then you can see it's pulling back, and then it gives it a go again. So, and then these little green triangles, so that's counter trend. So you can see that this guy up here, that blue triangle, says short-term trend is down. You can see that. And then when you see green triangles pop up, this is saying there's a big push against the trend. So be careful. So as soon as you see this guy pop up, take some profit. Okay. And then obviously the same is when we move up. You'll see right here red triangles. And trust me, they're not always just on opposite colors. They're really much more intelligent than that. So if you see these red or green counter trend triangles, they could be good clues as to what's happening. But so you get these counter trend, but you have a green upper band, and your lower time frames look good. So you have to get a feel for it and decide when to get out. And if you're more in profit, obviously if you got in up here, down here, and you get those counter trend triangles, you know, there's no need to get out because you're so deep in the money. Where do you join the trend? Okay, so we had a great trend day. If you missed the original put signal in the afternoon, where do you get in? So good spots to get in at the VWAP when it pulls back. So you want to always buy in an opposite candle. Okay, don't overpay. And then, so I have these bias candles, which again is based on an idea from Sadie. But so if the green or red candle, when the inside is gray, that is because it's So if you have a green candle that so it's below the 21 EMA or above on the other side, then I mark them with gray, so that you know that the 21 EMA is still on your side. So that is a good pullback candle, good time to get in. The trend dots, that's another good spot to get in when it gets close to the trend dots. And then this white line, the 21 EMA on the 3 minutes. So those are all good spots if you say, okay, here's a trend I want to get in. You want to get it for the cheapest price possible, and that's what this is trying to show you. The VAMI, so that's something that Sadie, I think he invented it and named it, with his team. But the idea is you get an outsized move. So you see the EMA clouds go up. It starts to look like a dolphin. It's got these fins up here. And then it rejects. So it gives multiple attempts. It rejects. And then it falls. So you can see your 3448 is right here around the mouth of the dolphin. And then it rejects it. It gives it one more go to see if it can break back up. And then it just vomits out and you get an outsized move. So don't use this one in the beginning, because it's more advanced. But when people talk about VAMIs, because it's getting more popular, that's what they talk about. And then you get the inverse VAMI where this opposite happens. So now you get vomit into the sky, make a ton of money. But again, start simple. Okay, go and look at the Discord where I talk about the focus traders. Look at the strategy. I try and keep it as simple as possible. So for a group that is a private group, it's free if you want to get in. But the idea is that we focus on our strategy. We're not gonna do, and we could tune it and make it better, but we don't want to have like a million different things that we want to bring into it, because we want everyone to learn our strategy so that we can get good at it, and then we give different people different jobs. So Victory is looking at Mancini tweets. As soon as it comes in, he's going to let everyone know. Someone else is going to watch the VIX. Someone else is going to do that. So now we have eyeballs on everything. Someone's watching Apple. Someone's watching this. So if anything happens, we're not going to miss it. Okay. So now we can trade better because we look at it. We wait for the trade. Some days we won't have a trade, but we'll learn the system. And then when there's a good trade like we had this afternoon, we're not going to miss it. So again, I don't think there's a lot of value in going through these other slides. These are just more examples, more details. This is talking about levels and how you build the levels and then how important they are. And again, you can go through these things yourself. But I just wanted to take today to just give you a quick overview of the indicator and how it works. And, I think I've accomplished that, I think. So any questions? Okay, well, I appreciate your time. I recorded this, so I am going to make it available.